Welcome to TheoTrade. This is Don Kaufman. It's July 21st, 2023. Just about 53 minutes to go to the cash close here on this Friday afternoon. The S&P futures massively unchanged. Nasdaq, of course, maybe leaning mildly to the downside. What everybody though is talking about, of course, is yesterday. That was on Thursday. It's a big sell side activity inside of the marketplace, which brings up the question, is Nasdaq volatility a wake-up call? All right, we're going to examine that and much more here on this weekend's update. Of course, we've got a big options expiration that's going off, well, basically right now. About $2.4 trillion is going OpEx, well, pretty much as we speak in the next 52 minutes, okay? Going to expire out. Quite frankly, I don't think it means all that much. Great, some hedges have to come off. People have to roll some stuff forward. But, you know, when people start talking about options expiration, first of all, every day is options expiration. It's a little bit different, though, when we have a monthly options expiration, specifically in the SPX. You know, what's interesting about the SPX, you have an AM settlement today, and we have a PM settlement. The AM settlement obviously has already happened. The PM settlement, well, that's coming again in about 51 minutes. Nevertheless, okay, a lot of stuff has to be rolled forward, and this is where people talk about all this volatility. And then I've got everybody actually talking to me and asking me about the QQQ and the rebalancing of the Qs. Here, let me just put all of that to rest right now. Go take a look over at the S&P, okay? Futures. Look at the S&P futures, because futures are the hedging instrument for the SPX. Futures are the hedging instrument really for any professional firm. They're doing barely over 1 million, okay, S&P futures contracts. Barely 1 million. You know, oh, I don't really know. Is that a lot? Is that a little? Okay, it's light and fluffy with a side order of cheese. Basically what I'm saying, okay, you got nothing. So who cares? In the next hour, it's going to pick up a little bit. But look, we're not exactly rocking out there in terms of volatility. Now, granted, things are kind of leaning to the downside right now inside of the Nasdaq. But the point I'm trying to make, it has very little to do with the options expiration. The QQQ rebalancing is like a joke. You know, the QQQ only holds, okay, 200 billion in assets. They're going to rebalance, and all the firms that actually mirror the QQQ have to rebalance. It's like a nominal though amount of stock versus, you know, what Apple really is or a Microsoft really is. Just push it aside. You know, it makes for good news, good media, but that's it. It's not actually going to impact much of the trade. What we are going to talk about on this weekend's update, that is actually going to impact trade. Let's get right down to it, because what we saw yesterday, I mean, look, what has really captured us all throughout the course of this trading week, it's not so much the SPX. The SPX this week actually tagged the upper edge of the expected move, and we contracted. But if we were to end the week right here, right now, we're still going to end higher, okay? Not significantly higher, but higher. I mean, look, this week only had like a $56 expected move, so it is what it is, but we're going to end higher, right? Meanwhile, okay, just taking a look at a couple of sectors, because I think it's really critically important to kind of orientate yourself of where everything is. So we're going to come over here to the QQQ, and we're going to put up auto expected moves. And auto expected moves quickly gives you like, what does the week really look like? The week at large. I'll tell you exactly here in the QQQ. Qs are actually going to finish the week, well, down. How far down? I don't know. Given the fact we have 50 minutes left, they could even reach for the lower edge of the expected move. Do not let that catch you off guard. Like, again, the Qs, there's a lot more going on than really meets the eye, and that's exactly what we're going to be talking about here on this weekend's update. So the Nasdaq is going to finish lower. And if you look at the Nasdaq, you're like, oh, well, it's actually pretty good. It's reaching towards the expected move. Meanwhile, okay, take a look at the financials for a second. We look at the financials. Where are they? They're in Never Never Land. These things are almost a 2 deviation move outside. Okay, outside the upper edge of the expected move. It's huge by huge. Okay. In addition to that, I think it's critically important to also look at the energy sector. Okay, whereas the energy sector also outside its expected move. So what do we have? Okay, overall, the way we really want to kick off, okay, and set this up for you is understanding what's going on right now inside of the marketplace. And I'm going to tell you exactly what's going on inside of the marketplace. Okay, first and foremost, I'm just blanking the screen over here for a reason. First and foremost, we have almost no degrees of correlation. When I say no degrees of correlation, okay, if we look over here at visualize, the advanced decline line is complete and utter slop fest, right? 50-50. Half the stocks are up, half the stocks are down. Okay. Meanwhile, what's really going on, okay, kind of underneath the marketplace is the SPX, right? The S&P 500 is largely been supported by XLF, okay, and XLE. These have effectively been up. Meanwhile, okay, back in Nasdaqian land, we'll just put, everything in tech. Just call this tech, all right, has been effectively down. The S&Ps, though, are still going to eke out some gains throughout the course of this week because of these two products. And again, the moves inside of the financials and the energy, look, they're massive. They're that far outside of expected move. And yet tech, okay, which is just kind of halfway home to the lower edge of the expected move, okay, tech just dragged the entire marketplace. And it's one of the first things, again, we're going to deliver to you here is understanding that you're not in a correlated state, okay, and yet the marketplace is just completely bifurcated, all right? Where does that leave us? I think it leaves us with a tremendous amount of risk. And that's exactly what we're going to look at and why there's going to be risk. And that's why I say some of that Nasdaq volatility from yesterday, it, if you will, kind of exposed its hand a little bit. One of the first things that I want to bring up, okay, is that I saw yesterday was a degree, if you will, of what I term volatility suppression. So I think we would all agree that at points yesterday, let's go look at VIX for a second. At points yesterday, would we agree that the market was down and down pretty good? And of course, yeah, everybody saw it. The S&Ps were down like 40 handles. In fact, if you want to see, take a look. What I'm about to show you, this is a screenshot. Okay, this is a screenshot from yesterday. So I love to do this in wild days. One of the first things I want to show you in the screenshot is right here. That's the S&Ps were down 39 handles. So the S&Ps are basically off 39 handles. The Nasdaq was down, okay, 405 points, which is good for like 2.5%. Where was VIX at the time? Where were you, VIX? Okay, it was taking a dirt nap. It was up like not even what? 3%. It didn't even lift its head up. There's a degree of volatility suppression. What is volatility suppression? For the most part, okay, when we've seen volatility lately, now again, this is a screenshot. Let's go back to live markets for a second. Every time we've actually seen some sell side activity come in the market lately, trade is running in, okay, and they're selling premium into the SPX. Why are they doing it? There's a dispersion trade going on. I've talked about this extensively. They're selling premiums and very short dated premium, very long dated, but they're just coming in and whacking premium inside of this marketplace, and they're whacking it in a big way. And by selling some premium, then they're turning around and actually financing all kinds of different equity trades, which is, in effect, dispersion, right? And if you don't understand that, and that's okay, because we've done it in a lot of different videos and so forth, okay? For the most part, think about just throwing a wet blanket on top of market volatility, okay? And that's fine until it's not, because effectively the dispersion trade works, well, until it doesn't. And what can happen in that case when you're kind of coming in and you're throwing a blanket on top of volatility, okay, the only way you're going to get out of it is to have like some exogenous event, some news announcement, something that literally snaps the marketplace. And what was interesting about yesterday's trade, now goes to the screenshot again, what's interesting about yesterday's trade is I looked at it and I'm thinking to myself like, wow, the Nasdaq's actually down 2.5%. The S&Ps are down almost 1%. What did volatility do? Look at this. Like the vol futures, they weren't even up. There was nothing, just nothing going on. Even the bonds were moving huge by huge, 1.5 in bonds yesterday. What did we get? We got nothing in terms of volatility. No one felt the fear, or maybe they did feel the fear, but the dispersion trade was far more important, okay? Now there's a lot to be actually grabbed from that. Like when you start looking at the data, you start kind of parsing through it, you start to realize you're like, oh, wait a second. If you thought yesterday was a big sell-off, you ain't seen nothing yet. That's one of the first things. Clearly, the marketplace just brushed it off and be like, whatever. It's not a big sell-side activity, okay? It's not good. It's not good at all, which I'm going to further that for a second. Another thing that was kind of cut through in a kind of a first volatile day we've had in a while, kind of cut through all the crap of like 7 stocks that have basically run the marketplace, right? You got NVIDIA, you got Tesla, you got Meta, you got Google, your Apple, your Microsoft, and they're basically, running amok in the marketplace. Why do I say that? Did you see the advanced decline line? The next bullet that I just have to cover, did you see the advanced decline line on that screenshot that I just showed you? Okay, it's a wild advanced decline line illuminates how serious some of the risk happens to be. This is another one. I'm going to go back to the screenshot again for a second. Screenshot! Okay, and the reason I'm going back to the screenshot, this is one I want to spend a minute on, because one of the scary premises that you have, okay, and you saw, this is yesterday's trade. This is July, okay, 20th, right? Here we are on the 21st, kind of recording this, still some time left. So at this moment in time, when I took the screenshot, okay, kind of late in the day, whatever, market rallied back up like 10 handles, but neither here nor there. The one thing I want you to see, that is the S&P 100 advanced decline line. That's 61 basically over 40. You're like, oh, so what? Who cares? Yeah, there's 61 advancers over 41 decliners, but the SPUs, that's the S&P futures, are off 40 handles. How's that even plausible? Oh, by the way, okay, with that kind of advanced decline line, of course, you would say, well, that's why volatility wasn't moving. It doesn't matter. The S&Ps are down 40 handles and volatility isn't moving, okay? The problem that you have in here, we haven't actually seen volatility really rear its ugly head. Not even close, because volatility comes with degrees of correlation. It's actually why I covered it just a moment ago. Covered it a moment ago because I wanted to kind of set you up for the idea, all right? You're looking at the advanced decline line today. Look at this. The advanced decline line is lovely. There's 65 advancers on here, and the marketplace can't get out of its own way. The Nasdaq, it owns you. That is one of the things that I have to express, and that's why I'm saying, is Nasdaq volatility a wake-up call? You better believe it is. Like, that's not supposed to be a bearish statement. I'm not trying to make a bullish or a bearish statement. The statement I'm trying to make, everything rests. It just rests on those 7 stocks. Everything. Okay. It doesn't matter and wouldn't matter if every single stock in the S&P was flying high, but you have, 4 out of the 7, tech stocks that are off and or just start to see some sell side activity. Okay. Or there's a bad earnings announcement, which we're going to bring up here, okay, in just a moment, because there's going to be some fear and loathing in earnings coming up here. You get one bad earnings announcement, you are done, just done. I didn't think Netflix was that bad, and Netflix is not marquee. Netflix is not going to move the market, but I'm bringing it up because I didn't think it was that bad, and it actually gapped them lower. Okay, Tesla, all right, Tesla, what happened? Gapped a little lower in here. Next week, you're going to hear some much bigger stocks. Microsoft will be on the dance floor, maybe a little Amazon, maybe a little Meta, a little bit of Google out there. I mean, people, it's only going to take one. It's only going to take one as a miss, right? Of course, everybody's like, well, if one miss and one gain, doesn't matter. You saw how things are getting treated right now in Tesla. Those numbers were not bad, okay? Got to be really, really careful, because Nasdaq volatility should absolutely be a wake-up call. For any other reason that volatility didn't go up with the market down 40 handles, the fact that the advanced decline line is positive yesterday with the S&P's down 40 handles, and I just go on and on and on, you're looking at this tape and thinking, what's wrong with this picture? The answer to that is everything's wrong with it. Everything's wrong. So a wild advanced decline line really illuminated some very serious underlying risks, that you could actually have financials up and up substantially, which also brings up the point in the tape yesterday. Okay, take a look where the financials were. They're actually up 0.6%. Take a look where the energy sector was yesterday, up 1%. S&Ps, doesn't matter. Okay, down, 0.85. Huge. Okay, huge to see that. All right, moving along from there, bail before big earnings. That's more of a question than a statement. Again, none of the thing I'm saying is trying to be bullish or bearish. What I'm trying to illuminate is how significant some of the risks are coming into next week. Okay, some of the big earnings. The problem is, yeah, you could get a Microsoft up and a Google down, and that would actually split the marketplace and we'd be fine. Okay, but the kind of risk that we're going to sustain if you have, all right, just 2 of these underlyings miss, and it happens to be on the exact same day, and quite frankly, they don't even have to miss, and it could still take the market apart. They miss on the same day. You could have the Nasdaq in absolute peril. The Nasdaq could easily be down. Again, you saw it down 400 the other day, which is only 2.5%, but you could have the Nasdaq easily down 600 to 800 handles, okay, on a day. And that's the kind of risk that we're going to be sustaining, because in the end, that's what this marketplace is. It's about, right? That's what took us higher. And this is where everybody goes, no, the financials helped out. I would agree. The financials did help out, but they helped out what? The last 3 weeks? You realize the financials helped out. They're up 2.8%. 2.8%. Almost every video that I've done lately, I keep pointing that out. People say, no, the financials have come back to life. Yeah, they're up 2.9% year to date. Boy, did you want to bring the energy sector into this? Great, let's bring the energy sector. They're still down. Energy sector is still down on the year. Okay, so what else you got? You go, but communications, look, it's tech versus financials and energy, and that is it. All the consumer stocks, you can add up a Costco and a Walmart and Target, you can have it all because it ain't even worth, right? What, it's not even worth discussing. They're just not big enough. They're not big enough. They're not actually going to move the market cap. Even after the reweighting of the Nasdaq, okay, it's not going to make a difference. Not going to make a difference. So 7 stocks come off, it's going to be absolutely huge. So bail before earnings, possibly. Again, we're going to sustain some big risk. So hands and feet inside of the vehicle, of course, during next week's earnings, specifically some of the tech stocks as they go off. And again, there's going to be a lot of tech earnings, the likes of Microsoft. Okay, for those of you that are not aware, okay, and Microsoft, maybe that had a key reversal in here. I don't even know. Okay. You're taking a look at Amazon. Okay, Amazon looks very, very similar. Its earnings, I apologize, are a little further out. Okay, Google's definitely got earnings next week. Okay, and of course, nobody likes Meta right now. It's down about 3%, down about 3% earnings. Again, possibly some key reversals in play. And obviously, NVIDIA is not having earnings, but NVIDIA is also well worth watching because one of the things I was talking about eventually, okay, we're going to fade the AI GPT. I call it the AI GPT trade. I prefer to call it the GPT trade, but okay, so generative AI trade, which has a lot to do with NVIDIA. Eventually, this is going to turn into a fade trade. Earnings, though, okay, way out into the future. The reality, though, it's Microsoft, okay, earnings that could actually have a really big impact on NVIDIA. So that's something we're going to have to watch here in the days to come. Not to mention, of course, I have a tendency to forget a little bit about Google. Where is the love for Google? Google's actually been relatively flat the last couple of months, also has its earnings coming out and is part of the GPT trade. All right, push that aside. Next week, you do have a little bit to worry about in terms of the calendar. You have a Fed announcement. Everybody forgot about the Fed next week. I didn't forget about the Fed. The Fed, okay, there's a 99% chance right now. I just looked at it a little while ago. The Fed Fund futures, and there's a 99% chance of 25 basis point hike. So I just put the Fed 25 basis point hike. Powell's going to be incredibly quiet. They're going to be totally data dependent after this. That's my take. Totally data dependent. But 25 basis point hike is priced in. Powell being quiet is my idea. The next thing, the yield curve is inverted the most since 1981. Do you remember it? Yeah, I was a little child. Yeah, anyway, the yield curve, though, is completely and wildly inverted, which still screams. And it's important to realize, like, whenever I talk about, like, an inverted yield curve, I'm actually going to come over here to Taste the Trade for a second and start talking about, like, inverted yield curves, and everybody's like, lost. What it basically implies, for those of you that don't know, it's about recession. Look how wildly inverted the yield curve is. The 2-year is sitting at 4.8, the 10-year is sitting at 3.8, and the 30-year is sitting basically at 3.8. Okay, the yield curve looks like it's horrendous, which usually signifies recession. Okay, and it's just crazy because again, everybody's caught in like AI land. It's gonna be okay. It's gonna be a soft landing. Okay. By the way, I want to ask this question, and this is for your own devices. Okay, how many soft landings has the Fed actually engineered in its history? Oh, did you say never? That's right. Think about that for a second. How many soft landings has the Fed engineered? Oh, they've never engineered a soft landing. Okay, I just wanted to throw that out there. All right, come on, it could happen. Okay, they could hit the broadside of a barn once in a while. But of course, this is the same Fed that actually said transitory. Okay, so transitory, yeah, their soft landing's about to be transitory. Continuing on over here. So as I was saying, that GPT trade is going to fade, and you'll know it by watching NVIDIA. NVIDIA to me is the pivotal stock, obviously, on the screen, and that's why I actually had a bullet specifically for it. NVIDIA on a percentage basis, okay, it takes precedence to anything and everything on the screen. And the reason I brought it up here is because that could be the beginning of a fade. But you know what? The move right here is no different than the move right here is no different than the move right here. And I just wanted to point that out. Okay, I'm not here for the directional bias. I am here to tell you, though, unequivocally, that trade's going to fade. right? That it is a trade. It's not about AI, okay? That right now everybody is like on a high because of a rally, and all of a sudden the merry-go-round of risks, what I believe is coming back next week. The merry-go-round of risks, where you're going to hear about earnings, they're not looking so good. You're going to hear about the Fed, it's not so good. Okay, we're actually going to hear about inflation possibilities because we have geopolitical risk proliferating once again over in Russia and Ukraine. It's just going to actually proliferate from there. Okay, merry-go-round of risks is coming to a theater near you. Yield curve inversion is going to come back on the table, and all of a sudden you're going to feel very differently about this marketplace. Back to the SPX. All right, one last look at the SPX. And the reason I'm looking at the SPX, okay, breached expected move, breached expected move, breached expected move, stayed inside, breached expected move. This week we breached, but we're going to end up, it does appear we're going to end up inside the expected move, okay, the end of this week. But I'm going to tell you right now, I think we're in a period right now of marketplace that is just wild. Okay, it's just downright wild, where the S&Ps, okay, and specifically the SPX options are getting expected moves wrong. And it's like the marketplace is just getting ripped apart at the seams at this point. And I always talk about how you go through periods of incredible efficiency, right? Efficiency meaning like we stay inside of the expected move, stay inside the line, to a period, okay, of chaos where like the marketplace couldn't, okay, find its own car keys if they were sitting in its hand. And that's kind of where we're at right now. And one of the things that really bothers me for next week, and I'm just going to throw it right up here and just explain it, okay, and that's this. I'm very much bothered by the fact that I realize that we have a Fed announcement next week, and everybody's already priced in the Fed, right? You know, it's 99% probability they're going to raise by 25 basis points, yada, yada, yada. But look, the next 7 days, you only have about a $63, okay, expected move. Now, I want to clarify, that expected move is not set yet. We just came off a week where we had a $56 expected move, and we broke outside and then pulled back in. This week, this next week, we only have a $63 expected move, okay? It's volatility suppression. You got to be careful because volatility will be suppressed until it is not. And the one thing that I really caution, I don't care if we start selling off hard. Okay, I don't care if we start selling off hard. I don't care if we start tagging the lower edge of an expected move early next week. Okay, what I saw in the Nasdaq and its volatility yesterday is a wake-up call for me. And I'm going to tell you right now, until I see the VIX rip, until I see vol futures really feel the fear, I'm not selling any premium out there. Not selling premium. Okay, I want to see that volatility start to pop. It's suppressed right now. It feels suppressed. It looks suppressed, especially in volatile days. And for the most part, we got clarity to that in the midst of volatility yesterday. Think about that in the days to come. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.